Hi, everybody. This is Alan Elman, the Blue Collar Investor, and welcome to another one of our sample trade videos. This one is a real-life example with Arista Networks, Inc., listed on the New York Stock Exchange under the ticker symbol ANET. Now, I initiated this trade on Monday, August 11th, 2025, and it expires on Friday, August 15th, 2025. I'm creating this video on Thursday, August 14th, 11 a.m. Eastern Time. Now, you're going to see three trades here, both traditional and defensive 5-day cash secured put trades taken from our BCI Premium Member Stock Report. I've been doing a lot of these weekly cash secured put trades this year because of the uncertainty in the market, even though as of August 25, the market has been quite resilient and recently has come very close to and perhaps even broken through the previous highs from 2024. Still, I would categorize this as an uncertain market environment from my perspective. So why did I choose ANET? Well, let's have a look at a little piece of our 9-page Premium Member Stock Report. And I highlighted for you in the yellow row, Arista, ANET. You can see here it's in bold. That means all of the technical indicators, as you'll see shortly, are bullish, not mixed. Now, it's currently ranked 17 on the IBD 50, which means it's an elite performer from both technical and fundamental perspectives. ANET is located in the computer industry segment, currently ranked A. Last week, the computer segment was ranked B. And it had a mean analyst rating, or MAR, of 1.45. That's outstanding because 1 is best and 5 is worse. So that's a bullish signal also. You'll notice that the on-balance volume arrow is in an uptrend. That means more cash flowing into the stock on up days than on down days, another bullish signal. And if we move over here to the near the money implied volatility, we see 35.4%, which I would categorize as robust, really perfect for covered call writing and selling cash secured puts. Now, there is adequate option liquidity with this particular stock, and the earnings report date, November 4th, does not interfere with these weekly trades. You'll notice weeklies are, in fact, available, and this stock has been on our watch list now for 6 consecutive weeks. And it's very difficult to get on our watch list because, as you can see in this blue row on the top, there are a myriad of requirements, parameters they must pass in order to make or get onto our watch list. So really a very strong security. Now, if we take a look at a 3-month chart of ANET compared to that of the S&P 500, you could see actually towards the end of June, there was kind of a consolidation leading up to the end of June, where the S&P and the stock itself were kind of moving sideways in step with each other. But then at the very end of June, all of a sudden, the stock took off to the moon. Well, actually, let's make that Mars. And you could see how it's been dramatically of late outperforming the S&P 500. Another reason why I really like this security at this point in time. Let's take a deeper dive into the technicals. You could see here, number 1 is the exponential moving averages, and the blue line is the 20-day shorter term is higher than the red line, the 100-day EMA longer term. We always want the 20-day to be higher than the 100-day. And you could see where this black circle is where we had that bullish moving average crossover. So bullish moving average technical indicators here in number 1. Number 2 is the MACD histogram, which is both a trend and momentum parameter. You can see the blue bars over here are above 0 and in fact ascending. Very strong bullish signal there by that green arrow. Now, if we take a look at number 3, where this blue arrow is, that's the stochastic oscillator, a trend, a momentum identifying indicator. And you could see that it's been trending up very recently. Now, are these parameters, indicators meaningful? Yes, they are, because if you have a look at number 4, the volume has been extremely robust which means that it's verifying the bullish indicators in 1, 2, and 3. So I like what I see about this stock from every single perspective. All right, now if we took a look, and I did on Monday before I executed the trades I'm about to show you, this is an option chain from Monday, 8/11. At the time, ANET was trading at 139.06. You'll see in a moment it's actually gone down a little bit. But that was my starting point. Now I looked at the out of the money 136 strike, which I would consider traditional. Okay, and that expired 8/15, as all three of these do. And that had a bid price of $1.12. Okay, so that's one trade I executed. And I did one contract of that, but I did two contracts of the more defensive 131, much deeper out of the money, 5-day expiration of, again, 8/15. And that had a bid price of 29 cents. Okay, so out of the money put strikes do offer downside protection, but deeper out of the money put strikes offer even greater protection. The trade-off is lower option returns. All right, let's feed that into our BCI Trade Management Calculator, or TMC. The trades are on the top here. You can see the price entry of 139.06, the two strikes I just alluded to, and the two premiums I just alluded to. We did one contract of the 136 out of the money put strike, and two contracts of the deeper out of the money 131 put strike, and the calculations you see on the bottom. So the spreadsheet tells us that it's a 5-day trade. You see in the red oval all the way to the bottom left. The break-even price points, 134.88 for the 136, more traditional trade, and all the way down to 130.71 from 139.06 for the deeper out of the money, more defensive 131 strike. Let's look at the calculations now. In the brown cells for the 136 strike, we get a nice juicy return of 0.83%, annualizing out to over 60%. Now, for that particular trade, if ANET goes from 139.06 below 136 and we take no action to buy back that option, we will purchase it at the break-even price point of 134.88, which represents a discount of 3.01% during the 5-day trade. Now, let's look at the calculations for the deeper out of the money defensive 131 strike. You could see the break-even price point is way down to 130.71 where the blue arrow is. And in the pink cells, we get our calculations. It's a 5-day return of 0.22%. That annualizes out to over 16%. Now, that's way less than 60%, but you know what? If your bank was offering a CD at 16%, would you not be in line for that? Well, it's still significant. Once again, greater protection to the downside. In this case, in the blue cell, 6% protection down to the break-even price point. But lower returns, but still significant. Now, once again, I'm showing you that I did check the earnings date because we always avoid those, November 4th. It is not interfering. It won't interfere for a long time. Let's look at our initial trade summary here. On the 136 traditional, we got 0.83%, 60% annualized, and 3.01% protection to break even. The deeper out of the money 131 put strike, we got $58 in premium, 112 for the first one, and that had a return of 0.22%, 16% annualized, 6% protection to break even. Now, the total time value premium that we collected on these three contracts for over the 5 days was $170. Now, here's a screenshot from my brokerage account showing that I didn't get filled with one contract of the 136 put expiring 8/15, and it generated $112 for that one contract. And here's the 131 deeper out of the money put, which generated 29 cents per contract, or $58 for the two contracts. Now, the trade management calculator will also show us our total initial returns for the entire portfolio, and I did this just on the three contracts. So it tells us here, three contracts, we generated $170. The total capital invested needed to secure those three put trades was 39,630, which resulted in an initial return of 0.43%. And I did the math for you that annualizes out to a little bit higher than 31% annualized. Okay, welcome to today, Thursday, August 14th, 11 a.m. Eastern Time. Where are we? Well, ANET has dropped down to 137.12 as of 11 a.m., which is $1.94 lower than the entry price of 139.06. One of the beauties of selling out of the money cash secured puts is we have protection to the downside. So right now, the trade is still a positive one. We're $1.12 above the out of the money 136 strike. We're still higher than that by $1.12, and expiration is in about a day and a half. It could go either way. And we're well above the 131 deeper out of the money defensive 131 put strike by $6.12. So we're really looking good for that one if we want to avoid exercise. And we are well above both break-even price points of 134.88 and 130.71. So let's summarize now. Significant returns can be generated with 5-day traditional and defensive cash secured put trades. We can craft our trades to what's going on in the market today and align with our personal risk tolerance. Most of you know by now that I'm a very conservative investor. Capital preservation is always foremost on my mind, and that's why I structure a lot of my trades defensively. Now, if we're in a normal to bull market, believe me, I'm the first one to go to out of the money covered calls. So in this case with ANET, we have a significant initial 5-day return, and it's currently still in a favorable position, even though the stock has dropped in price by almost $2 a share. Now, what if one of my contracts, or all three of them, or whatever, is exercised? Well, my plan is this. I really like this stock at this point in time. That certainly could change at any point in time, but right now it hasn't. I think what I'm going to do is I'm going to allow exercise if it moves in the money. I'm not going to buy back the option. And I'm going to take possession of the shares. And next Monday, I will write a covered call. If I want to write defensive, I'll use in the money. If I want to be more aggressive, I'll use out of the money. And once again, let me reiterate, which I always do to you folks, because it is what it is. These are low risk, but not no risk trades. All right. Anytime we're seeking to beat no risk returns like CDs, money markets, treasuries, etc., by definition, it means we're willing to incur some risk. And I am, but not a lot. So these are low risk strategies. So ladies and gentlemen, that ends this presentation showing you 3 trades that I executed on Monday. So far, so good. And folks, I hope you enjoyed this presentation. I'm going to continue doing this, sharing my trades with you. So hopefully you'll find these great learning tools. That is my hope anyway. So please stay in touch. Let me know what you like, what you don't like about our presentations, and we'll certainly craft future presentations based on your feedback. Thanks so much for listening and watching this presentation. And as always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.